Imagine earning 24% returns mandated by the county government. In today's video, I'm giving you 3 top counties where investors are generating double-digit returns in 2025. Depending on the state you choose, the interest rate could be as high as 24%. This little-known interest investment, divided into the number 72, will tell you how long it takes to double your money. It's called the Rule of 72. Let's use Iowa at 24% as an example. 24% interest divided into 72, the answer is 3. That simply means 3 years to double your money at 24%. That's pretty darn interesting if you're a newcomer. This is a way to generate money quickly. If you use 16%, which is the maximum allowed by the Arizona State Legislature, if you divide 16% into 72, that equals 4.5 years to double your investment when you earn 16%. In Arizona, the state legislature has mandated a maximum rate of 16% to be paid on tax lien certificates. Thousands of tax lien certificates are available every year within the state of Arizona. What we're attempting to learn today is what are the best counties for making money. In this instance, it's Maricopa County, Phoenix. Not only do they have an abundance of tax lien certificates, they also have certificates that will pay up to 16%. Beginners should be careful and study the process before attempting to travel through this maze, which seems like a minefield of information, especially if you're doing it by yourself. I can assure you there will be obstacles. That is why you should seek advice from experienced attorneys and financial professionals. I personally like to employ experienced coaches to give me their real-life, hands-on expertise, which they have learned by buying tax lien certificates and tax defaulted properties at auctions, and they've devoted time to marketing and reselling the properties. In the past, at auctions in Maricopa County, Phoenix, I've conducted large group classes with beginners at the tax lien certificate auctions. In some years, they will have as many as 30,000 tax lien certificates at this auction. The other 14 counties within Arizona all pay up to 16%. However, they will have many less certificates than Pima, Pinal, and Maricopa County. The tax certificate auction is mandated by the state legislature, and the county treasurer is required to publish the list of tax lien certificates in the local newspapers and on the county website. The auctions can be live as well as online. Investors ask me, why is the county having an auction? The answer is because the county needs revenue to pay the schools, the school teachers, the police departments, sheriff's departments, and many other bills for services the county provides. If the property owner fails to submit property tax payments, there is definitely going to be a consequence. And the consequence is the county will issue a tax lien certificate. If the certificate isn't paid, the county will confiscate the property. Prior to confiscation, the treasurer will lien the property and give many notices of default to the property owner. I'm not going to hard sell you on this process. Instead, I'm telling you about it and who it's for and who it's not for. Then you can decide. This investment is for those who want safe, secure investments. It's not for someone who's looking for a get-rich-quick process. The tax lien certificate auctions are public. Anybody can attend. The bidding usually starts at a maximum of 16% and then continuously goes lower, with the lowest bidder winning the tax certificate. It's a reverse auction. The bidder is not buying a property. The winning bidder receives a piece of paper which demonstrates they have a lien and that income is owed to the certificate holder. Bidders have no right to the property. Bidders are not allowed to collect rent or intimidate the delinquent property owner in any way. The owner who is delinquent is allowed to stay on the property for a long 3-year redemption period, while the winning bidder waits for the expiration of the redemption period. By law, if the property owner fails to pay the delinquent property taxes, the county will generate a certificate. They will auction the certificate at a public auction. This certificate is really a tax lien certificate and allows the purchaser to earn an interest rate of return. After the redemption period expires, the certificate holder will become the property owner and after a formal foreclosure process. Let's move on to my second recommended county for 2025. On the opposite side of the United States is the state of Florida. Hillsborough County on the west coast of Florida on the Gulf of America conducts tax lien certificate auctions in May and June each year. Traditionally, Hillsborough County will have an abundance of tax lien certificates. The legislature of the state of Florida mandates that the county treasurer must pay up to 18% as the highest percent on the certificates in Florida. I've learned a lot about this business from working in the trenches and doing it day to day. I've made a lot of mistakes, so you won't have to. The tax lien certificate auctions are held in spring and summer, May and June. The auctions in Hillsborough County have as many as 50,000 tax lien certificates available. The certificates are auctioned online using an internet site titled LienHub.com and RealAuction.com. Research of the property is mandatory at tax defaulted auction. It's buyer beware. Our third county is Polk County, Iowa, which is the home of Iowa's largest city, Des Moines. Tax lien certificates in Polk County pay up to 24%. Polk County is the largest in terms of population in the state of Iowa. I've attended tax lien auctions in Iowa, and I want to remind each of the viewers it's important to read and understand the rules and the consequences. Full disclosure, Ted Thomas is not an attorney at law or a real estate broker or a financial wizard. I'm an investor and I guide and help others through the learning process. The county government is a separate jurisdiction from the state and federal government. The county functions are confined within the boundary of the county. Therefore, county rules apply at the auction. Iowa has special rules for all bidders. Beginners should understand the tax defaulted auction process and the fact that the bidder does not get paid the same as the previous two mentioned states, Florida and Arizona. For example, in Polk County, Iowa, successful bidders will not end up with 100% property ownership. The winning bidder at the auction will be unable to purchase 100% of the property. The successful bidder will win a certificate which will pay 24%. However, they will only be able to purchase 99% of the property. Yes, they've won the auction. However, the county, that is the state, will not allow tax delinquent property to be sold 100%. Special rules apply to protect the farmers. The state legislature in Iowa does not want farmers to lose the farms or the land. The process protects farmers and simultaneously rewards the investors. It's important for me to remind the viewer that each county can make its own rules in the tax lien certificate business. The information I'm conveying is direct from the Iowa statutes. After 30 years of guiding, teaching tax lien certificates and tax defaulted auction investing, I've concluded that life is filled with people who claim to be experienced. Beware, there's an epidemic of newcomers, wannabes, and posers who want to teach tax lien certificate investing and tax defaulted purchasing, and they will all call themselves experts and thought leaders. They simply declare themselves a guru. However, they have little or no experience, although they're filled with chutzpah. My recommendation is just ask them how many tax lien certificates or tax defaulted properties they have purchased at auction and how many they have sold and at what profit. I can assure you that you'll be disappointed with all the fluff that you get for an answer from most of that group. If you want to learn more and how to invest in these high-yield tax lien certificates, make sure to like this video, subscribe to my channel, and in my next video, I'll show you exactly how to conduct due diligence on these properties to minimize your risk.